Okay, so just skipping through the general disclaimers. What I'll do is now is give you a summary of the business. So, yeah, the projects that we have developed in PNG are nation building, import displacement, but also export facing. The key point to understand about this portfolio, these are first in PNG, but they're nothing that is very complex with regard to what we're proposing. As you can see here in the presentation, the first two projects that are really the key flagships are the CCL, Central Cement and Lime Quicklime project, and then the Ortis Resources Oricolo Bay mineral sands project, which is vanadium titanomagnetite, industrial mineral sands and zircon. And so these two projects essentially are structured so as to be faster cash flow. You can see the clinker and cement project is also there. That is really an extension of the quicklime project itself. So once that's up and running, that'll be just a natural progression of expanding the existing business. The markets are there, the approvals are there. And most importantly, we've got the construction bids and the financing structure set up for these projects. So we'll flick over to the next slide. But on the renewables, I'd just like to highlight the renewables, particularly the carbon, is set up. It's set up specifically to enhance and enable the CCL project and the Ortis Resources mineral sands projects to be carbon neutral. So those emissions we can't avoid, we're able to apply carbon credits. So just so people are clear on what that opportunity is. So having a look at the initial project, CCL, what's in for the next 3 months, as I said, we're fully approved and we're just organising financing and condition precedent offtake arrangements. Our expectation post 3 months is to be in construction, and post that construction phase getting into cash flow. Towards the end of this year if we sell a quarry product, or the end of next year if we are just doing quicklime. On the mineral sands, that second row, we're concluding definitive transaction documents and financing as we speak, and we look to start works shortly thereafter. Opportunity to, by the end of this year, to actually be in cash flow, having only a 38-week build time on that. So it's a much shorter lead time for the projects to be recognising cash flow. Next slide. So where are these projects, you might ask? Well, if you have a look at the Central Cement and Lime project, you can see that right next to Port Moresby. It's on the coast, right next to the $18 billion ExxonMobil LNG facility. Oricolo Bay, slightly to the northwest there, right on the coast as well. Our philosophy has been to develop on the coast where landowners are easy to engage. It's easily able to be accessed in development and also construction, as well as operations. So those two flagship projects will benefit from that portfolio approach. You can see a couple of other red circles there, which give us an opportunity to expand our business and where some of the carbon is. Okay, next slide. I will just touch on the aggregates and quicklime to start with. Next slide. Okay, so 24 kilometres from Port Moresby, right on the coast. It's a peninsula. It has high-grade limestone. There's an early opportunity to open up a lime quarry and service Papua New Guinea and surrounding regional players' needs for high-grade limestone that's currently being imported from as far away as Philippines. This project is fully integrated, so it has its own quarry, its own private wharf in deep water, and it's going to be able to meet the domestic demands from a quicklime point of view for PNG. Groups like Newcrest, Ramu Nickel, Simberi, all are using quicklime imported from Malaysia and Vietnam, where they'll be able to use that locally. We've also got a big demand for quicklime coming out of Australia, all the battery metals, alumina sector as well, but anything that's rare earths, nickel, anything related to batteries, battery metals, lithium, all is requiring quicklime, which will be one of the largest independent producers in the region. An 18-month lead time to construction, so very small lead time. The construction bids are already received. We've got the full support from the state provincial governments, from the Prime Minister down. We also have our own granted special economic zone and given a tax-free holiday, circa 10 years for that. So you can see the support that the PNG government is giving to see this project get up and running. Next slide. You can see here what's involved: 2 kilns, 400,000 tonnes of quicklime per annum. It could be easily scaled. We have a resource base that can easily support double and triple that level of high-grade quicklime production. You can look at the EBITDAs. They're very healthy EBITDAs over the life of the project and very low operating costs. You look at the mineral inventory there. To produce 400,000 tonnes of quicklime, you just need around 800,000 tonnes of lime. So the huge opportunity to scale up this resource once it's up and running. The key here is to focus on, it's a 91 million capex and an extremely healthy EBITDA of circa 30 million per annum. Next slide. I already touched on where the market is for this, but you can see there: nickel, lithium, copper, cobalt, alumina, rare earths, uranium. It gets used in water treatment, road pavements, agriculture and crop management, global decarbonisation, in reducing sulfur dioxide. So this mineral is truly what I'd call an ESG mineral. It supports all areas of the environment and assisting the environment and removing emissions. Next slide. Touching on the clinker and cement as our expansion, and just reiterating this, the existing phase 1 and the expansion project is fully approved. Next slide. You can see there, on the side of the cliff there, you can see the limestone sticking 100 metres out of the ground thick. There is no strip ratio. This is the construction bids rendition of what it will look like. You can see there how close it is to the PNG LNG, the ExxonMobil facility. Total, Santos and Exxon are looking to put another 2 trains and put another $14 billion to expand that facility. Obviously, if PNG in this area was not a good investment destination, they wouldn't be doubling down with $14 billion investment. What you can see in the background there is the Ray quarry. That has over another 200 million tonnes of resource on our mining lease already drilled out. The key here is that the opportunity for quicklime and cement is to also support the east coast of Australia. 50% of Australia's cementitious materials are coming from North Asia, some 21-day sail away. We are between 2 and 7 days sail, depending on what part of the east coast you're going to get to in Australia. So extremely compelling. Next slide. The approximate size of this will be 1.65 million tonnes. We're targeting circa 910,000 tonnes in cement grinding and the balance sort of 800,000, 700,000 tonnes in clinker production. And that will be exported to Australia. Next slide. Picture tells 1,000 words, and if you have a look at this, you can see where PNG is located to its own market and its requirements in its own market. Having been up to see the Prime Minister with our chairman and one of our key investors last week, there's an outline of 60,000 kilometres of road is needed over the next 20 years. And a big part of that will indeed need to be and require cement. We are the only cement producers in PNG when we get up and running. All their cement is currently imported out of Japan and China. And you can see for an export market for us and what the opportunity is, east coast of Australia, you may ask, yeah, well, that's great. Who are our competitors? You can see those competitors at the top. of the screen and how far away they are. So we feel we have a very, very distinct advantage with regard to proximity to a very large market, being the Australian market, and that continues to grow on an imported basis in pure tonnage terms each year. Next slide. This really just shows, looking down, the Santos, Papua LNG and PNG LNG opportunity there. It's an existing facility being expanded and where our special economic zone and mining lease reside. You can get full view of that and see the proximity to that and why it's such a strategic location next to deep water. The site has other opportunities for us to expand in the future, but our focus is get the Flagship project up and running, get that into operation and utilise the resources to expand there beyond. Next slide. Switching gears over to the iron and industrial sands project. Next slide. 230 k's northwest of Port Moresby, where the capital city is, next to our lime and cement project. This project is fully permitted, ready to start. We've actually started construction of the camp and getting equipment ready to be delivered to site. We have, it's a 500,000 tonne per annum magnetite operation and a 1 million tonne per annum construction sand, with zircon and also ilmenite, a couple of 100,000 tonnes of high titanium product also. As I mentioned, site works has commenced. We already have offtake in place with Japanese trading house and a Chinese special pellet producer. The key opportunity here is that this is a very low-cost operation with a high EBIT margin. We're talking around, the 25 to 30 million US dollar capital cost, including working capital, with a 25 million EBITDA. So it's a very attractive project with regard to returns. Very simple, at surface operation. Next slide. With all the approvals in place, really all there is left to do now is to finalise and announce when our construction starts. We expect that to be forthcoming in imminent terms. In relation to the process, very, very simple. You can see there, simple digging at surface, smaller amount of stripping. Then we're straight into the ore. It's only 3 to 5 metres deep. We'll be removing that, putting that through gravity to separate the light and heavy mineral. The light mineral is processed to be a construction sand. The heavy mineral is put over magnets to separate the magnetite, and then the high titanium ilmenite, as well as the zircon. We rehabilitate as we go, and we're rehabilitating with sago palm for locals, and we'll have mechanised sago which will support the locals long term, well after mining is finished. Next slide. You can see the post-tax MPV and the CapEx and the payback and the EBIT profile I spoke about, the magnetite, the construction sands and the zircon on the right. As I said, very simple operation. We've used long-term consensus forecasting on iron ore prices. I know the iron ore price is higher than where it is at the moment, but we've taken a fairly conservative long-term view on what those prices will be that factors into our revenue and economics. Next slide. Okay, next slide. So without going into a huge amount of detail on this, what I mentioned before, we've got 2 projects that are fully permitted. Those 2 projects that are fully permitted are in the final stages of financing arrangements that we're negotiating at the moment. Now, once they are finalised, it's really taking what PNG is known to have, which is a huge abundance of natural resource when it comes to forests, some of the most biodiverse, pristine, virgin rainforests in the world. And, that's not coming from me. That's coming from a name everyone would know, David Attenborough, who's written numerous articles on Papua New Guinea. The areas that we've looked at securing are those that are endangered from logging, where they've been reclassified to be a carbon estate, or the intent is to reclassify them away from forestry to a carbon estate, thus saving that forest being chopped down. In saving that forest, the landowners will be the primary beneficiaries, with the PNG government. Us as the developer will get a small portion of the revenues, but most importantly, we'll be able to utilise the carbon stock to offset our products, so we can then sell our products as carbon neutral. And when you start to look at in the industry who can sell carbon neutral, not in 2050, but in short order, that's going to be us. So we believe that we will be, when you go to an ESG committee meeting or to a board, if we can match a party's reliability and quality, we believe we can easily penetrate the market with either a price match or even a premium because of selling carbon neutral. Next slide. The other elements of our renewable business is geothermal, solar and battery storage. They go hand in glove, particularly the solar and battery storage, with just a general operation. And what I mean by that is the lime and cement, there's an opportunity to use solar with the gas we've got slated for our energy source. For battery storage at Orocolo Bay, we've got an opportunity for battery storage with solar with diesel. So these aren't huge projects that we're trying to undertake to divert shareholders' monies away from or management's focus away from. These are really bolt-ons that any business doing business today is looking to do in offsetting standard energy practices. Next slide. In offsetting those standard energy practices, as I mentioned before, if you look at the unavoidable emissions and the offset, that's where we're moving to. Mayur is, as I mentioned, the landowners and the government are getting a huge slice of the pie. Mayur, for its part in basically free carrying everyone into this and getting the credits accredited by VIRA at a very high standard, we'll get 16% of the overall take. It's a very low capital intense business, as you could appreciate, and therefore the landowners and the government should get majority of the benefit. Next slide. That's that benefit's articulated there. So you can see how that's split. If you think about it from a landowner perspective, they're going to be extremely keen on ensuring that carbon, which will yield far more in absolute dollar terms to them through carbon sales. And then when you look at the take that they get under forestry versus the take they'll get under a carbon project, there's no surprise that we've had absolute full support with regard to it, seeing these forests be conserved and the people's homes and culture preserved, and get a large benefit from that. Next slide. So I think that we've already talked about that, so we can flick over to the next slide. From an executive management team perspective, we've got deep experience in PNG. To the audience there, been there for 12 years now. We've got all the approvals in place. We've got the full support of the PNG government. That's demonstrated by all the approvals as well as being granted, the first downstream processing fully integrated special economic zone with the appropriate tax concessions in place. Next slide. And some of our other management. Next slide. So I think as a snapshot, you can see there, ASX code MRL, share prices 18 cents, market cap is 53 million, less than what we've actually spent on the portfolio to date. Shares on issue, directors and management have a very large slice of the company, so you can be sure that the investment from your perspectives will be aligned with management's. This isn't a lifestyle for us. This is we've got a huge amount of skin in the game to see this become a very successful business. And when you look at the EBITDA multiples, if you take the multiple, half the multiple of the materials businesses in Australia, you're still looking at a $1 billion business once it's up and running. Our focus is financing. So any questions, please feel free to reach out. Happy to take questions.